I can drink a little coffee. So Jim, Jim, he hit the live button. So we are officially on, buddy. How you doing today?
I am doing well, Brian. How about yourself?
Good, good. I'm doing great. So you've seen these, you know how they work. We're going to just kind of chat for a couple of minutes and kill some time. This is kind of our little intro, waiting for other people to join in. We will get officially started right at 10 o'clock. But until then, we'll allow an opportunity for some folks to keep clicking in. And Ben likes to go ahead and start early rather than late, which I love him for. But how's things going? How's everything in your world?
You know, it's been going really well, Brian. We added another state to our coverage, you know, as there's been a bit of a slowdown in mortgage lending work. So added some new clients and yeah, I'm excited. I'm looking forward to the summit coming up soon.
Absolutely.
So it's been a great summer. How about you?
Good, doing great. Just busy as always. You're a busy guy. Our viewers are busy people. You know, appraisers tend to work day and night.
Oh yeah.
And in fact, I have one of my appraisers coming up from Nashville today. She's going to visit with me here in our Owensboro, Kentucky office, and she'll be sliding in probably right after this webinar. And she communicated with me early this morning and said, I was up real late working and up at the crack of dawn working, trying to get some of these clients' revisions taken care of and reports taken care of so I can come visit with you. So it's most appraisers have to work day and night these days, and
Yes.
it's tough. It's a very great job. It's very rewarding, but boy, it can certainly have some challenges when you've got those deadlines to meet. So you mentioned the summit, which is coming up, just next month, actually.
Yes.
Out in Las Vegas. Where else are you going to be over the next several months or over the next year?
Well, I'm going to go to the APM symposium. That's a big lending event for one of our clients in San Diego. So I'm going to spend a week down there. We've got the Pacific Northwest Lenders Conference coming up in Seattle. So I'm going to go up there for a few days. And then, as we mentioned, the summit in Vegas. I'm especially excited because I'm going to speak again this year at the summit.
Oh, great.
Yeah, I spoke for about 3 years in a row, and then I took a hiatus last year, but I'm back speaking, and I'm actually going to teach a course there.
Oh, great. Now, is that going to be pre-conference education that you're doing?
It is pre-conference education.
I've done that. Yeah, that's great.
Yeah, so I'm excited about that. And then, I had such a great experience with Appraiser eLearning. You folks are fantastic.
Wow.
I'm hoping that we find a way to work together again, because I sure would like to come back to Nashville.
Great. Well, we can certainly make that happen, Jim. We loved having you, and we'd love to have you again. Hey, real quick, for anybody that's the early bird and watching us before we start at 10, you mentioned you're going to be speaking at an appraisal conference coming up, and also you're doing pre-conference education. If you don't mind, let our viewers know number one, what are you teaching pre-conference? If they want to come early, they can maybe take that class and catch it. And then also, what session and what is your topic during the actual summit that you'll be talking on?
Sure. Well, I'm excited to teach a 5-hour continuing ed credit hour course for desktop appraisals, next generation valuations. So I'm going to talk about desktops and also what some folks call hybrid appraisals, or I've heard them called bifurcated appraisals. And that's the idea that a property inspector will go out to the property, take the photos, and then provide that information to the appraiser, and he or she will develop the valuation from their desk. I know that there's a lot of, let's say, controversy about the topic. Some appraisers think, well, desktop appraisals are bad. It's the end of the profession. But folks said that when they introduced the 2055 drive-by. Right. And it turns out, those are only applicable for a very small portion of assignments. And I think the same will be true of desktops. It'll be another tool in the toolbox. It certainly will never replace, the URAR 1004. And then I'm speaking about, some of the disruption we're seeing in other industries at the summit. and talking about how we're beginning to see that in the residential appraisal industry. And I'm also going to make a kind of a big, bold plea. I would like to advocate that more states consider a USPAP carve out so that appraisers can do evaluations without complying with USPAP. And that's exciting to me because for every residential appraisal ordered in America, there are about 4 evaluations ordered. So it's a potential new book of business for appraisers. And the reality is, if appraisers could compete with realtors and others, most of the banks, the institutions, the credit unions, they would prefer to have a product from an appraiser.
Right.
And so it could be just a boom time for appraisers if we could compete in that market.
Yeah, I'm glad you spoke on that. And we'll talk as soon as we get started. Maybe spend another couple of minutes on that, because I think that is indeed a huge opportunity. Somebody told me, Jim, it was like an $8 billion industry, billion-dollar industry.
Yes, it's enormous.
It's huge. And, gosh, when we talk about value, who's better to develop those opinions or communicate effectively value than appraisers? And there are a handful of states that will allow that as a prescription of law. I know there's, I think Indiana passed a law recently. Tennessee provides an opportunity for that. And appraisers just tend, I was having a conversation with somebody the other day, and I said, I think the unknown is worse than bad news. Even as an appraiser client, if I got to call you up and say, hey, Jim, I'm sorry, I had an emergency, and I know we said we'd get that report to you today, but it's just not going to happen. I'm really, really sorry. We'll get it to you tomorrow. I think you as a client would probably appreciate that more than just me being silent. Right. It was supposed to be in today and you hear nothing and you don't get it. And now, everybody's kind of frustrated. Well, let's go ahead and get started. We've got some viewers on now, and we're actually a minute past the 10 o'clock hour. So we're going to go ahead and start, Jim. Good morning, everyone. My name is Bryan Reynolds. I'm with Appraiser eLearning, and you are viewing the Appraisal Report webinar. It's a free webinar brought to you from the fine folks of Appraiser eLearning. We provide a free webinar once a month. It's typically the third Thursday of every month at 10 o'clock Central Standard Time. We're glad that you've joined in for this edition. I'd like to remind you that all of our webinars are recorded. So if something happens and you can only see a piece of it, and you've got to go maybe look at a house or something and earn a paycheck, we understand it's being recorded so you could come back at a later time and finish that viewing. As a consequence, if you go ahead and hit the subscribe button to our YouTube channel, it'll keep you in the know. It will let you know when we have special editions, which we do have occasionally, and we provide a lot of free stuff. So check it out. I'm very happy to have my good friend and special guest today, Mr. Jim Baumberger. Jim, I'm going to let you introduce yourself. Tell everybody who you are, where you're at, what you do, and if you don't mind, maybe how they can reach out to you.
Okay, sure, Bryan. Well, first, I want to thank you and all the fine folks at Appraiser eLearning. I'm really delighted to be here today. So I'm a second generation appraiser. My dad was an appraiser and a real estate broker. And so I've kind of grown up around real estate. I've specialized in residential appraisal. For about a decade, I was a working fee appraiser specializing in complex properties. And then I started working for banks and mortgage lenders and realized that I enjoyed, training appraisers and leading appraisers, helping them be more efficient, more productive. And so I've really enjoyed that. I've worked for some of the biggest banks and lenders in America. And also I have some experience in the regulatory arena. I was on the Oregon Appraiser and Certification Licensure Board, the ACLB, which regulates appraisers and AMCs. And so I learned quite a bit about compliance. And I'm outside Portland, Oregon. And I own and operate a company called First Choice Appraisal Management. We're that rare breed of AMC that I think most appraisers that work with us love us, which is unusual, as we're a cost plus AMC. We have true transparency. We itemize the appraiser fee and our management fee separately on every invoice. No one ever wonders, the appraisers get a full market fee. And, because we are appraisers, we love appraisers. as you know, I like to author courses and instruct appraisers. And so basically, I'm sort of known for wanting people to collaborate and get along. I love realtors. I love lenders. I know that's not universal in our community, but I tell folks, if you're an appraiser and you dislike realtors or dislike lenders, either diversify your practice and avoid them,
right,
or learn to love them. So I'm kind of, how can we learn how to collaborate with each other, support each other, and just make it a better experience for everybody?
Absolutely, absolutely. Well, Jim, if someone wants to reach out to you privately or after the webinar, what would be a good way for them to get in touch with you?
Sure. My email address is simple, Bryan. It's just Jim, Jim, at firstchoiceamc.com. So first and choice are spelled out. So it's Jim at firstchoiceamc.com. And my commitment is, if I get an email from someone, I will answer that email.
Great, great. Well, Jim, we're excited to have you in the webinar today, and we're going to talk about a lot of things. This webinar is entitled Diversifying Your Appraisal Practice. So we're going to talk about a big variety of things. What I find very, very interesting when I'm teaching a seminar or lecturing at an event, very often I will ask the audience a question. And I will simply say, how many appraisers in the audience are conducting appraisals for purchase transactions or refinance transactions? And as you can imagine, almost every hand, if not every hand, goes up, right? And I ask folks to keep their hand up. Keep your hand up a minute. Now, while your hand is in the air, I want you to look around the room and see who all's hands in the air. And inevitably, it's, again, almost everyone. And then I let the audience know, now, this is your competition. Basically everyone, right? So then I say, now I would like to ask, how many of you do relocation appraisal work? And very few hands, if any, go up. And what's interesting, the relocation companies want 2 appraisals at least, if not more.
Yes.
Okay, how many of you do litigation type work? And we're going to dive into these subjects a little bit more in depth in just a minute. Rarely do any hands go up. How many of you do condemnation work or eminent domain, as we call it? Very few hands go up. Construction defects. I just rattle off a few. And it's just interesting to see that the majority of appraisers are all fighting for one pie.
Yes.
Instead of, trying to maybe expand that into several different pies. Has that been your experience when you bump into, in particular, residential? And guys, I'm a commercial appraiser, but I'm also a residential appraiser. Just like Jim said, that's kind of his roots. That's my roots. I mean, someone said, Bryan, you don't understand. You're not a residential appraiser. And I said, I beg your pardon. I am a residential appraiser. That's what I do. That's what I've done most of my life, right? So I am a boots on the ground residential appraiser. But when you bump into residential appraisers, Jim, is that what you find to be true as well? Most of them just kind of use this real narrow marketplace.
Yes, Bryan, I think that's very true. And, I always advise appraisers, that's a bad business strategy, right? And even if you do mostly mortgage lending work, there are some appraisers who will have one primary client. I tell appraisers that's not a good strategy over the long term. It's not sustainable.
Right.
So I'm like you. I think they should diversify and find other types of business. That's why I'm a proponent for appraisers doing evaluations. And then to your point about relocation appraisals, I did relo appraisals, and you're right. They want 2 appraisals on every property. And if those values are spread by more than 5 or 10%, they'll go out and get a 3rd appraisal or whatever they need to do.
Right,
now,
right.
I loved relo appraisals because they were after the anticipated sales price. Mm-hmm. And they were pioneers in a way, because even when I did them in the early 90s, they didn't just want 3 comps, they wanted 3 active listings, right?
Right.
And so I enjoyed the ERC form. In some ways, it was a more intellectually honest approach than the 1004. And I really love that work. You also, as you know, you have to be a bit of a better technical writer because you really have to tell a story about the property, the market, supply and demand above and beyond what you might do in a typical appraisal. Yeah, I agree with you. Most folks are they're all fighting over a pie, which is shrinking this year. So the smarter move, I think, is exactly what you're saying. Diversify. Go get a slice of a bigger pie with less people trying to carve it out.
Right, right. Absolutely. Well, let's talk about that a little bit. And before we go any further, I would like to remind our viewers that if you have any questions at all, please feel free to type those in and we'll answer as many questions as we possibly can get to during the broadcast. That's one thing a little uniquely different about us. We let you ask real-time questions. Now, if I don't know the answer, I'm just going to say I don't know the answer. But hopefully Jim will have the answer for you if I don't. And, you know, the nice thing about it is if you ask a question and you stump us, it's going to make me want the answer to the question as well. So what I'll do is we'll reach out to somebody else and find that answer for you and get it to you at a later time. So don't hesitate to ask any questions whatsoever. We'll try and cover as many of those as we possibly can. So let's just stick. I mean, there's so many opportunities for appraisers. And, you know, I tell folks there's so many ways to make money surrounding real estate. It's crazy, right? So we're going to talk about a few of those opportunities today. And I tell you, we kind of started talking about relo. So let's just stay with that 1 second and talk about relocation assignments. You know, they want 2 or 3 or 4, as you mentioned. And, you know, the interesting thing about that, Jim, they are looking for the anticipated sale price, which might be a similar result to a market value opinion and might not be similar to a market value opinion. Can you elaborate on that a little bit?
Well, I mean, they are very interested, obviously, because they've got an executive transferring in or out. They actually want to know what that house is going to sell for. Right. So there is a little bit more emphasis, I guess, on anticipation and what you believe that house will ultimately sell for. And so you're developing a slightly different value. And the listings are more important too, because as you know, Bryan, listings are the leading indicators of the market. So if you're trying to predict what this house is going to sell for with a typical exposure time. Now, did I get that right, or would it be marketing time?
Well, what we want with that is the anticipated sale price. See, market value will look at the exposure time. So what I always like to say is if you're in a neighborhood that typically takes 6 months, or let's say 8 months to sell, they really don't care about that. What they want to know is what's it going to take to make this house sell in 4 months or less, or 3 months and less. So if it typically takes 6 months to sell a property in this particular neighborhood and they want it sold in 90 days or less, what's going to make that happen?
Sure, a discount, right?
Probably a discount, exactly. Yeah. And so the real thing that we're looking in that crystal ball and trying to figure out is how much of a discount is going to have to be examined to get that to move. So
I also liked it, Bryan, because as you know, then they sell the house, right? And so you get a report card. They'll come back and they know how close you were to the actual sale price. So as you get that sort of feedback over time, I think you get better and better at it. You kind of clear up the crystal ball a little bit more. Right.
You know, do you have any recommendations if folks are interested? And you know, I look at areas like Memphis where FedEx is and whatnot. I thought, you know, if I was in an area with a big company that specialized, boy, I would really go out there and try to seek that work. You know, to me, I like relocation work because it's kind of like court work. There's really no pressure involved. There's no lender pressure because your client really genuinely wants to know what this property's worth. They're going to buy it and then turn around and have to try to sell it, right? So they're not trying to pressure, and hopefully most appraisers watching aren't experiencing too much of that these days anyway, but the relocation companies genuinely want to know what those properties are worth. And so I enjoy doing those. It's a little bit, as you said, more detailed, but we charge a significantly higher fee as a result. If one of our viewers is watching right now and they would be interested in exploring relocation work, what would be your recommendation, and how could they seek out trying to get relocation work?
Well, that's a great question, Brian. I'll be honest with you. I've been out of that for some time, but I know that, there is the Employee Relocation Council.
Mm-hmm.
And that would be something they could Google, and they could reach out and talk to the Employee Relocation Council, the ERC, and tell them that they are, interested in doing these appraisals. There are also, in boom areas, they could also call some of the companies. You mentioned the job expansion. So
Mm-hmm.
if you've got a big expansion in an area near you, you could actually call that company and find out who handles their relocation appraisals. And then the third idea I have is, I know there are some lenders that actually specialize in working with the folks that are relocating. Perhaps coming in, they're still going to need a mortgage loan. So you could probably go to a couple of mortgage events in your area and ask around, who specializes in the relo buyers.
Sure.
And I think by talking to the lenders, talking to the ERC, talking to major industries that are expanding, I think they can all point you in the right direction.
Yeah, absolutely. You might, in addition to all those fantastic ideas, is see if you can identify a couple of realtors that deal with clients, and typically what they do. At least the last one I did, they were still doing this. They actually will provide a list to the homeowner and say, here are the 5 relocation appraisers or the 3 relocation appraisers. Pick 2 that you'd like for us to use. And I can't guarantee you they'd pick those 2, but at least you get your name on that list. So you might ask. We've actually had a question about the relocation work, Jim. So I'll go ahead and ask this, and we'll knock this one off the list. So Matt asked a question. He says, does relocation work need the appraiser to be certified or licensed by some authority? Does relocation work mean the appraiser needs to be licensed? Same thing, by some authority.
So, obviously they want an appraiser, so they're going to want, a certified appraiser with a state credential.
Right.
I do not believe they are looking for anything beyond that. Like, you don't have to have any particular designation or have taken any particular courses. But of course, we know, based on USPAP, you can't accept an assignment if you're not competent.
Right.
So I would almost think, if you're somebody who starts out on this road, perhaps the first one you do, or maybe the first and second one you do, wouldn't be a bad idea to associate with one of your peers that does relo work. Would be a great way to sort of protect yourself and establish competency. But there are some differences in the form, as we talked about, a little bit of difference in the analysis. I think most appraisers could catch on literally with an assignment or 2, and they'd be off running.
Sure.
They are looking for appraisers, state credentialed appraisers.
Sure. Thank you, Jim. And Matt, as Jim said, certified by your state regulatory board, commission, panel, whatever you have in your particular area. The relocation company themselves, typically, they're not certifying, but I think there are, or there used to be, as Jim mentioned, if you Google ERC, I think it's the ERC Council, they used to offer a course in relocation. I don't know if they put a little star by your name. I'm going back a few years when they actually published a manual. It's probably all online now, but you could certainly go down that avenue and check that out. Let's move on to the next one, Jim. Let's talk about litigation for a minute. Litigation support, litigation expert witness. Whether it be divorces or construction defects. I tell my students all the time, as the interest rates fluctuate, and boy, we've enjoyed really low rates for a long time. What would happen to your business model if rates went back up to 8 or 9 or gosh, double digits for that matter? You'd probably slow down a little bit.
Yes.
And what I say is, people will continue to be relocated. People are going to die, so they'll need estate work. Construction defects, widening roads. That's going to happen regardless of the interest rate. And sadly, the statistics are, first marriages, they average 51% end in divorce, and that's really sad. But that's a statistic. And I believe second marriages, the stats are about 70%. Of second marriages end in divorce, and third marriages don't even try it. I mean, who are you kidding? I'm just kidding. But it's got to be bad, right? So my point is that work's not going away. I mean, sadly, people are going to get divorced. there's going to be some controversy over marital assets and the division thereof. If somebody's wanting to maybe start looking at getting involved with litigation, what kind of recommendations do you have for that?
Well, I used to do some litigation appraisal work, and I did some expert witness testimony. I found that to be fascinating work. And to your earlier point, there's a lot less competition. Basically, the way that I went after that was to contact local attorneys and local CPAs. And most of that work, whether it's divorce, probate, litigation, construction defects, most of that work is going to originate through either a CPA or an attorney. And so I reached out to a number of attorneys. And at the time, I sort of emphasized to them that I did a lot of public speaking and instructing. And obviously, as you know, if they hire you to do a litigation appraisal, they often want you to be available. You may never testify, but you may even sit in the courthouse for 3 hours just in case they need to call you in. And so because I was used to public speaking and was used to doing complex property appraisal, I was able to secure some of that work. So I'd contact your local CPAs and your local attorneys.
Great idea. Great idea. When I first started out doing litigation support, I would buy some extra USPAT manuals, and I would staple a business card on the front of it. And I would go around and knock on the door and actually provide a complimentary copy of the USPAT publication to law firms. And while I'm not an avid reader, I wish I was. Attorneys are weird. They love to read, And so I'd bring them a book this big and say Merry Christmas, And what's interesting, I'd say this is the minimum requirements of appraisers, and you might want to kind of if you've got if you're going to cross-examine an appraiser, it might behoove you to be up on their minimum requirements. So.
Great idea, Brian.
Yeah. What's interesting is if you're an effective witness, and again, as an appraiser sitting in that hot seat, you're still unbiased, right? I mean, you're not being an advocate. You are acting in the capacity of an appraiser. But if you do a good job, and Jim, you mentioned some good ideas. If you're an effective communicator, right? If you can get that point across, you may be more effective than somebody that has a lot more credentials than you, that just can't effectively communicate a position. And you need to be able to communicate to a level that a judge or jury understands, not in a technical, I know a gentleman that's a genius. I mean, that's the best way to describe him. And every time he starts talking about statistics and regression and all this stuff, I'm like, Greg, you got to dumb it down. You're talking to me. You got to dumb it down so I can understand. Well, before we get into some other of the appraisal stuff, like you mentioned, evaluation and hybrids, and I know we're going to talk about 2 to 4 and some of those things in just a second. What other areas do you think that might be interesting for our viewers to dabble in, or maybe investigate, whether it be stigmatized properties or tax consulting, or any other ideas you want to throw out there before we get back in the appraisal?
Well, one thing I think you mentioned was condemnation work. When I was an appraiser puppy, my dad was doing some large assignments. Some were bridge widenings. And then there was a big municipal sewer project. Now he was, residential and commercial like yourself. So in the modern world, chances are they may prefer a general certified appraiser, particularly because they get into partial interests and takings. But that is fascinating work. And again, if a gentleman or a woman is certified, they can always associate with a general certified appraiser. But that is phenomenal work, because, for example, if they're going to put in a municipal sewer project, they are going to need hundreds, maybe thousands of appraisals. And those appraisals could be as simple as, we're going to take 4 feet strip along the front of someone's yard. And in that strip, there's 2 trees and 4 bushes. And you'll be valuing that small amount of land. So it's fascinating work. And then as you begin to do the appraisals, right, you begin to get more and more and more data. And so, after you do a couple of dozen, you're off to the races. You are just rolling. You have a template. You understand how to communicate the results. And so that's fascinating work. There are some areas, municipalities, where if an appraiser does not do that appraisal, they may hire an appraiser to go out and negotiate with the property owners, because someone has to sit in their house and talk about the fact that we want to take 4 feet off the front of your yard, and this is what we're prepared to pay. So whether the appraiser is doing the work or help negotiating the procurement, the taking, it's fascinating work. And because you're talking to folks, you get better and better at communicating. The better you can communicate, right, the more credible you are. And as everyone out there knows, I mean, that's what we're after as appraisers. We want to be credible. We want to produce credible results. But I think that kind of work, highway work, right-of-way work, is another area, Brian, where it's a fairly big pie and there aren't very many people that are trying to get a slice of it. So although someone may have to associate with a general certified appraiser, or again, somehow they have to gain competency, right? There are probably a lot of folks that if they started to move towards that, maybe that could become a pretty big book of business and help them diversify.
Absolutely. One of the things that our viewers might consider if they're interested in that kind of work, look at the 10-year road plan and find out what the projections are for the next many years. They're going to widen this road, and you could actually solicit those property owners up and down that road, educate them, say, hey, look, you're going to be getting notified that they're going to be coming along and wanting to do a taking. And according to state law, or depending on if there's federal funds involved, you are entitled to what's called just compensation. And when they come and approach you and offer you something, you don't have to immediately take that. Now, if you think that's fair and equitable, fine. But if not, you have the right to fight that. And by the way, I specialize in that kind of work. As you said, there could be a huge book of business there for someone. And I know many states, they say they use residential, but a lot of times they'll use commercial, because if it's residential and commercial combined, they just want to send it to one office. But I do know a lot of states, I believe Tennessee, Kentucky, they will use certified residential appraisers for the taking that involves residential property. So it's definitely something to think about. And they're going to, like we said earlier, they're going to keep building roads and widening roads. That work's not going to go away. It's going to be here for a little bit. Hey, we had a question, and Yoga Chuck, love the name, ask, what about arbitration? So what about arbitration and mediation? Let's throw that in there as well.
Well, those are almost offshoots of litigation, but again, as you said, Brian, people are always going to have disputes about real estate, and they're going to have to settle those disputes. And even if they're going to go before an arbitrator, they need something to support their case. And so what better than to have an appraisal from an objective appraiser to go in and support their side of the argument. So I view that as very similar, kind of an offshoot of litigation. You still have to be able to develop credible results. You have to be able to communicate them well in writing. And depending on the situation, again, you might be asked to verbally support your work or answer some questions. So again, that's a great additional way to expand your practice.
Sure, absolutely. I did I worked with an attorney on a planning and zoning issue one time, and they were going to blow up the field to extract those mineral rights for the farmers. So they wanted a zoning change, and of course, all the neighbors didn't want their backyards being blown up. So one time I did a gun range. We're going to bring in a large regional gun range. And, so do you want them shooting, all levels of law enforcement shooting guns right behind your house where your children or grandchildren are playing, so that was a class action lawsuit. There's a lot of different availability there for appraisers to get involved and utilize their expertise. So let's talk about some of the things that you were mentioning, really before we went live. You and I were briefly talking about evaluations. So that's really typically not performed by appraisers in most areas.
Correct.
And you were speaking on that, and it sounded pretty intriguing a little earlier. So if you don't mind sharing that information again, I think that'd be great for our viewers.
Yeah, I'd be happy to. So, all of us are familiar with USPAP, but not all of us are probably familiar with the Interagency Appraisal and Evaluation Guidelines. They come from the agencies, the alphabet soup of everyone that regulates banks, credit unions, and financial institutions. And so, the Interagency Evaluation Guidelines are very clear. And as you said earlier, Brian, I mean, if you look at what the federal regulators tell the institutions, you're looking for someone who is knowledgeable in the cost approach, the sales approach, and perhaps the income approach. And they talk about you need folks who are professional, who are qualified, who are objective. And when you read through what the Interagency Evaluation Guidelines say they're looking for in an evaluator, they're basically describing us. They're describing appraisers. And so I believe, as you alluded to earlier, we are the most qualified set of professionals to provide that service. And here's the rub, though, is that for every residential appraisal ordered in America, there are 4 evaluations ordered. So 4 times the volume of our appraisal work, we are missing out on that. We're pretty much shut out of it altogether, except for a few states. And so the folks that are performing these evaluations, I mean, sometimes it's realtors, sometimes they're not even realtors. And so when you see evaluations in lending institutions, once in a while you'll see one that makes sense, but that's the exception, not the rule. Most of the time as an appraiser, you'll look at an evaluation and you realize it's not credible, and sometimes they're ridiculous. So who better to do that than appraisers? The rub is, though, that the institutions, they can get these evaluations at a price point where appraisers can't compete. Now, why can't we compete if we're the most qualified? The reality is, as I'll bet pretty much all of us know, as an appraiser in most states, if I'm going to do an evaluation, I still have to comply with all the components of USPAP. So in essence, I can tell someone I'll give you an evaluation, but I'm going to perform an appraisal and comply with USPAP. When I do that entire scope of work, now I'm at a price point where I don't compete in the evaluation market. So there are institutions that get evaluations as low as $75 or $90, but again, probably 9 out of 10 of them are just ridiculous. They have no basis in fact. They're not supported. So the reality is institutions will pay up to a point. I mean, they'll probably pay $200, $300. So they will actually pay more than they would pay a non-appraiser if they could get an appraisal product. So as I talked about, when I'm at the summit next month in Vegas, when I speak, I'm going to advocate for a USPAP carve out in more states. And all that would do is it would simply say that as an appraiser, we can complete an evaluation in full compliance with the Interagency Appraisal and Evaluation Guidelines. However, because we're doing an evaluation, not an appraisal, we do not have to comply with USPAP. That will allow us to do a similar scope of work and produce credible results in this evaluation and actually a better product for the industry. And so that's important for all of us because it protects the credit system in America, and it brings appraisers, the most qualified people, into that work arena where we can give institutions a more credible product. And it protects credit quality. It protects the financial system. It's actually would be good for the nation if we could get appraisers into that book of business.
Yeah, who's better to do that than appraisers or more qualified? So right now you're saying that in the states that don't allow it, because there are just a very few,
maybe 4,
three or 4, that's about it. So in the states that don't allow it, you're saying that you could accomplish it as an appraiser if you were able to go to your client and say, look, I know all you need is this, but because I have to adhere to the minimum requirements of USPAP, I have to add stuff to it, right? Yeah. I gotta add stuff in order to be compliant with USPAP. And if the client says, I don't care what you do, as long as you get me this one form back, as long as you're able to add to it that gets you in compliance with uniform standard, you could actually complete it It would just be an
Yes.
appraisal, and it needed to be an appraisal report or a restricted appraisal report.
Sure.
So
And
there's a way to do it now, but what you want to do is open the door to allow us to do it more in line with the interagency evaluation and appraisal guidelines.
That's correct, Brian. Yes.
Yeah.
And I think, now there are probably some appraisers sitting out there listening, and they're thinking, well, I'm not sure I want to do an evaluation because I'm not confident that I'll produce credible results. And I would remind them that, credible results are always measured in terms of the intended use. And the intended use is a big part of what shapes the scope of work. So the reality is, when an institution wants an evaluation, they're not making a first lien mortgage at 95 LTV, right? So it's typically, evaluations are used for other things. Could be asset management, but a lot of times it's a non-first lien mortgage credit decision, like a second mortgage. Could be a home equity line of credit. It could even be for things like loan delinquencies, where the institution is required to get an idea of what the property is worth, but they're not yet ready to get that pre-foreclosure appraisal. So the evaluation work just comes and comes and comes. And what I would ask appraisers to consider is, just like in your Fannie Mae forms, you've got this pre-wired, hardwired scope of work. If you could do evaluations, you would do them based on the evaluation guideline scope of work. And so the folks that use those services, they are not expecting the reliability of like a 1004 URAR, because they're not facing the same credit risk. And so the idea is you create a valuation service that is commensurate with the transaction or the credit risk. And, I talked to an appraiser yesterday about desktop appraisals who was arguing, against them. And then he admitted that, he's got a couple loans. He got a loan recently on a refi where Fannie gave the lender a property inspection waiver, and they did a refinance transaction with no appraisal whatsoever. So
he was probably okay with that, since it was his own home, right?
You know what I did, Brian? I teased him. I said, so you're really opposed to that? He said, absolutely. That's wrong. That's just horrible. I said, but you cashed the check. There's this long pause. Well, yeah, I cashed the check.
Yeah, for me, it was great. For me, it was great. Hey, let's take a quick pause here. We're actually a little late. Ladies and gentlemen watching, this is Bryan Reynolds, my special guest, Jim Baumberger. We're at the halfway mark, Jim. I can't believe the time is going as quickly as it is. If you are watching and you have any questions, and we do have some questions coming in and some comments, a lot about fees, so we'll talk about that in a second. But if you have any questions, feel free to type those in. I would like to remind you, this is the Appraisal Report webinar brought to you by Appraiser eLearning. We have these once a month. If you would like to be on the show, or if you know someone that would like to be on the show, or if you would like for us to reach out and have a in particular guest, please let us know. We would be happy to reach out and invite them on. And let's get right back at it, Jim. So before we get into fees, and there's been a lot of chatter here in our sidebar on fees. I'll just say this, that, when I got into this business, I didn't know any better. And probably like most residential appraisers out there, you were taught to fill out a 1004 form. And no matter why somebody called my office, whether it was a homeowner thinking about selling their house, whether it was an attorney for a divorce, whether it was for a purchase, through secondary market, by gosh, I crammed a 1004 down your throat no matter what.
Right.
Because to me, that was the appraisal. And guys, that's not even the appraisal. That's the appraisal report, right?
Yes.
So if you think about it, there's a whole book of business out there of folks that are trying to sell their house. Think about the real estate agents. And I was never an agent. I got my license a couple of years ago. Don't throw anything at me. Just another way to diversify my business model. I had a multi-million-dollar property that I could have listed, but because I wasn't an agent, I wasn't able to do that. That will never happen to me again. I learned the hard way. I missed out on a huge opportunity because I didn't have my license. So I have my license now. That'll never happen to me again. But needless to say, I have learned a lot that there's a lot of agents out there that don't like to list property because, quite frankly, they don't know what to list it for. They struggle with that.
Yes,
They like being selling agents because they're out trying to find somebody a property, or if a house recently sold or something like that, they maybe have a benchmark. But you got a homeowner that's lived in the house for 40 years. The homeowner doesn't know what to price it at. The agent doesn't know what to price it at. What a great opportunity for them to hire an appraiser, right? And get an appraisal. Now, the thing is, does a homeowner thinking about selling their house really need a picture of their own house? Do they need a floor plan they walk every day? Do they need a little location map with rub-on arrows? They don't need any of that junk, folks. What they want is your independent, unbiased, professional, expert opinion as to what that house is worth. And guess what? In accordance to USPAP, you can communicate that orally. You could do an oral appraisal report, and I sell a bunch of them. I do a lot of oral reports. I do a lot of restricted. They don't need a 40-page report. It's a huge opportunity. So please, those watching, keep an open mind. Take off the blinders. The residential appraiser has lost millions of dollars of potential income because they think everything has to be done one way, and you have lots of opportunity. So let's talk about that for a minute, Jim. You get, as far as I'm concerned, appraisers get paid for two things. You get paid for your time and your knowledge. The more time you spend on a project, the more I charge. We were talking about relocations earlier. Relocation appraisals take a little longer. They're a little more detailed. I charge more money. So all these folks that are talking about fees over here, if you're selling a project that takes less time, doesn't it make sense that it probably would be less of a fee than something that takes you more time? And you do whatever makes you comfortable. I really don't care. But if there is a product that you can sell that takes you half the time, or if you could do, as Jim was saying, these evaluations, and we're not going to get really in depth on fees here, but if you could do 3 or 4 or 5 a day, from the perspective of what does it take you to do 1 1004? Probably on average, when I talk to appraisers that do everything from A to Z, they do about 1 a day, maybe 1.5. And that's normally working more than 8 hours, Jim. That's working 10 to 12 hours. So if you could knock out 5, 6 of these things, from the economic standpoint, you probably are making more money per day that way. Am I missing something on that, Jim?
No, Brian, I think you're exactly right. I've told clients for years, appraisal fees, basically they represent the appraiser's time. And then, as you said, their knowledge and experience. So, since our fees basically are a reflection of the time we spend on the valuation service, I agree with you that if we do something that takes 1/4 the time, well, obviously you would not need to charge the same amount to be profitable. So I encourage appraisers to stop thinking about the fee for an appraisal, which is how most of us think, as you said, but to start to think about how much you make an hour. And if you think about how much you make an hour, more like an attorney or an accountant or some other professional, then it's a different perspective. For example, these desktop appraisals. Now, desktop appraisals do not offer the same fee to an appraiser that a 1004 URAR appraisal would. But the reality is, with the next generation desktops, there are appraisers who are completing them in about 30 to 45 minutes. So to your point, if you could do easily, you could do more than 1 an hour. But let's say you even did, 6 in a day, you would actually earn far more money per hour than you would make if you spent that day doing 1 1004. So it's a matter of changing the mindset and beginning to measure our fees not by the appraisal, but by the time that we spend on the valuation service. So I think you're right on, Brian.
Very good. Hey, Jim, let's talk about 2 to 4 families for a minute. I teach a lot of continuing education in live setting.
Sure.
And I actually, we've started doing more than we've ever done before. We're starting to do more and more qualifying education. And, it's interesting when we get into the income appraisers tend to shut down. You know,
Yes.
they get nervous and, oh, I can't do income. And I'm just, the viewers out there watching, I love the philosophy of always try to continue to learn, right? There's an old saying, live life like you're going to die tomorrow, seize every opportunity. But there's another saying that I really love that's called learn like you're going to live forever. And so I have a thirst for knowledge, and I encourage everyone watching to continue that education journey, no matter how old you are, no matter how young you are, no matter what level of licensure you have. If you're a licensed appraiser, try to graduate up to certified residential, and they've just expanded those qualifying options now. You have more options than you used to. May of this year. If you're a certified residential, think about jumping on up to a certified general. It's never too late. Time's going to go by whether you do something or whether you do nothing. But when we talk about income, people get a little shaky. And I'm just going to give you a kind of an inside secret, I guess, is what it's been over the last many years. An income capitalization approach is the easiest thing you'll ever do. I mean, it's simple math. If you can add, subtract, divide, multiply, you can do an income capitalization approach. That's really how easy it is. Gathering the data sometimes can be a challenge. Reconstructing their financial statements can be a challenge, but it really is just simple math. We ask a survey question. So let's look at that real quick, Jim, and then I'll let you elaborate on this, and we'll dive into the 2 to 4 family topic here a little bit. So we ask our viewers or potential viewers a survey question. So let's get to those results real quick. The webinar survey question was gross building area is, and so we gave them 4 options. Option A is the same as gross living area, and 13% of our answers said that was the correct answer. The second option includes all living space and common areas based on exterior measurements, and 20% of the respondees thought that was the correct answer. Option C includes all living space, common areas, and basements based on exterior measurements, and 27%, 20% for item B, 27% for item C thought that was the correct answer. And finally, item D includes all space in the under roof square footage total, and there were 40% thought that was the right answer. So the majority of the respondees thought option D was the correct answer, and then the second place was item C, and really B, C, and D were pretty close. So the correct answer is C. It includes everything based on exterior measurements, including the basement, and that probably surprises some of our viewers right now. But if you pull up Fannie Mae guideline, that's what you're going to see, isn't it, Jim?
Yes, it is. And I think the fact that so many people did not pick the answer that included the basement goes back to what you were saying earlier. Most of us are so focused on the 1004 URAR where we have to break the basement out. And so now we've jumped from single family to 2 to 4 unit small residential income properties, but we're thinking the same way. So clearly it is a different type of valuation, and we have to approach it differently.
Right. And then the under roof, guys, that would include the attic, for crying out loud, right? So we're not going to use that unfinished area. So let's talk about 2 to 4 real quick. How hard are those to do? Is there a big learning curve on that? When I got started, the thought of looking at a duplex scared me to death. Forget 4 units. I was intimidated by 2 living units. So if somebody is interested in that, Jim, what should they do, or what should they explore? I know you've got a course out on that too.
Well, I was just going to say, at the risk of being a little, self-promoting.
Go right ahead.
As you know, Brian, I spent many months authoring a course for Appraiser eLearning, and it was recently released. And it's a 7-hour course. And so, it is A to Z, everything you would ever need to know to be more competent than most folks who are doing these valuations today.
Okay.
So that's a great way to learn. But, to your point, may I dive into a little bit of what I consider the specifics?
You bet.
So one of the things I will tell folks is that, sometimes I see someone who is a single family residential appraiser, and they will take a 2 to 4 unit valuation, and they will not do a credible job. We have had appraisers do 2 to 4 unit valuations, and at the bottom of the market data grid, where you have the unit of comparison analyses, like price per unit, price per bedroom, some of those, we've had appraisers not comment on those. We've had appraisers take the answers out that their software program put in because they don't understand how important that is. And then we will see them adjust the differences in small residential income properties the same way they would adjust a house. And when you apply the exact same methodology used for a single family to a 2 to 4 unit, it's ugly, Brian. It's ugly. So one of the things I tell folks is you really, you have to get the estimate of market rent for the subject property correct. And so you need to spend a lot of time developing the right market rent. So that comes from rental comparables. And so you've got to be real diligent about uncovering rents. And I tell folks, if you get the rents right, and then as we'll talk about more in a moment, moving forward, if you get the gross rent multipliers right, the whole appraisal is a breeze, to your point. If you have the right market rent estimate and you have the right GRMs, I mean, everything else becomes fairly easy, and the appraisal will be cohesive. It'll hang together. So I tell folks, spend a little extra time and get the rents right, get your gross rent multipliers right, and then, many things take care of themselves as you develop your analysis.
What's interesting, and again, sometimes we tend to make things more difficult than they really need to be. Okay. Sure. If you look at why does an investor buy an income producing property, I mean, if you just invoke a little common sense, it's not that difficult. They're buying it for the income, or They're buying it for the potential income, one of the two.
Yes.
So, I just did a project that was well over 400 units. Okay. I was not doing an appraisal. I was not acting as an appraiser. I was acting as a registered agent with the Tennessee State Board of Equalization. And we analyzed the income. And that's what we're looking at, because that's what a prospective buyer would be looking at. What is the income stream? What has it been? What's the anticipated income? What's the projected income for the next year? And the value, in my opinion, is going to be based on that income stream. And is it going to be continued or projected to be stable, right? Or go up or go down, right? So the other thing with these 2 to 4, sometimes you have to look at what's not only just the rentable, but we talk about gross rents, but sometimes we got to talk about income. So what might be there a difference between income of an income producing property versus what the rents are? And, some of my students will scratch their head there and they say, well, if I've got 4 units, I just multiply 4 times the rent of each unit, and that would be my income, which is the same as the rent. And while that could be true, there might be other sources of income. So, I did one time where they had a storage facility, basically storage shed in the backyard that had 4 bays. And, maybe your rent for the unit was $500, but if you wanted one of those storage sheds, it's an extra $50 a month, right? Sure. And because the entire street consisted of multifamily, if one of these occupants didn't want that, then they're paying $500. But guess what the owner could do? Rent it to the next door neighbor for the bicycle or the lawnmower or patio furniture, whatever they wanted to put in there. So now we're looking at income from other sources, whether it be coinage, laundry, parking, storage. So you've got to dive into that as well. Jim, any other areas? What about getting your vacancies on those? Is that a real challenge on the income producing properties, or you're extracting all of that from the marketplace?
Yeah, that's exactly right. So, you can get vacancies by talking to realtors that work in that market segment. You can also get them a lot of times from talking to the different building managers. A lot of times there'll be a property manager who may manage many of these types of properties. You could probably Google it in the modern world. You'll find stories about vacancy rates. You can also get a sense of it when you look at MLS listings for 2 to 4 unit properties. Typically, they will tell you how many units are rented at the time. So there's a lot of ways to uncover the vacancies. And to your point, you want to have an idea of the vacancies. Now, there are large parts of America, though, where vacancy is not really an issue. The issue is there aren't enough 2 to 4 unit properties to meet the demand. So vacancies are typically going to be a fairly small percentage in most of our markets, because, as you know, we didn't build enough housing after the 2007, 2008 credit foreclosure crisis. So we are over 1 million homes underbuilt. And that also translated into rental units. So in many markets, there's a shortage of rental units. So you do have to explore vacancies, but I think you're going to find right now in most areas, that's not really going to be a significant risk for the investor.
All right, I have a couple more questions, and we're running out of time, Jim. So let's try and knock a couple of these out.
Sure.
Gregor says, "Hi guys, these numbers are just really silly. You can't hurry much. They do ask for an opinion of value, which is an appraisal. I mean, we get more than that for final inspections. What's your thoughts? The form they ask for, the process is still the same, and you can't do an opinion of value in an hour." Okay. What do you say to Gregor on that one?
Well, I appreciate his point of view, and
Absolutely.
Some of these desktop appraisals that we're looking at now, we have one, we call it a next generation desktop. And what do I mean by that? So, the inspector goes out and does the inspection, provides all the photographs and the data on the neighborhood. And the appraiser goes in to an interactive form. The appraiser does what he or she is an expert in. The appraiser researches the market, selects the comparable sales. In this next generation product, once you select your comparable sales, Bryan, like that, in a nanosecond, they are on the market data grid. Their photos are on the photo page, and their locations are on the location page in a nanosecond. So the appraiser is spared all the data entry. So you pick the comps, they populate the grid, you apply the adjustments, you reconcile, and of course you explain, the data, evidence, support, logic, reasoning for your reconciliation. So you're not really inspecting, you're not stuck in traffic, you're not doing data entry. You literally pick the comps, apply the adjustments, write the reconciliation, and you're done. So what I would encourage Gregor to do is look at the scope of work for these products. And again, USPAP says that credibility is always measured in terms of the intended use, and the intended use and the problem definition are what drives scope of work. So you have to understand it's a different scope of work, and it's a product for a different kind of credit risk, perhaps no credit risk at all.
Right.
So that's what you have to keep in mind.
And I have mixed feelings on this. I certainly as well can appreciate Gregor's perspective on this. But I will say this, Gregor, we and those watching, we need to keep an open mind, and maybe we just need more dialogue on this. All right. Times are changing, and boy, you better be willing to change. You don't type reports on a typewriter anymore. It doesn't make sense. You don't use 35 millimeter film anymore. Boy, we used to, didn't we? It doesn't make sense. So I appreciate what you're saying, and I might not totally disagree with you, but it's so funny, and I'm not self-promoting either, but I just got this out of an old car that I'm about to donate to charity, and I saw this in there. I wrote an article, and I don't even know when this was. It was many years ago, but the name of the article is "A Dentist, a Surgeon, and a Head Chef. Like other professionals, appraisers should focus on the tasks with the highest return." So if you Google it, you could probably find it. It was in the NAA magazine called Appraiser Focus. It was in, I think, Working Real Estate magazine. It was in a couple of different places. And basically the premise of that article that I wrote, "A Dentist, a Surgeon, and a Head Chef," was think of yourself as a surgeon. What does a heart surgeon do? They are in the operating room, and their hands are in your chest, and they're fixing your heart. And the minute they're done, what do? They reglove and they go over and put their hands in another heart. Yes, they could close. They could wake you up. They could wheel you back to the patient room. Heck, they could even bring you your lunch tray tomorrow. But that's not the highest and best use of the heart surgeon, is it? The highest and best use of the heart surgeon's time is having his hands fixing your heart. So maybe from an appraisal perspective, the highest and best use of an appraiser's time is not calling and setting up the appointments or typing a report, or maybe it's the analysis part. Maybe it's spending the critical time in the operating room doing the surgery instead of taking a picture of a comp. And those are all things that hopefully Fannie Mae and appraisers can get involved when they're going to design that new form that they're working on. Last year at the summit, Jim, I asked Freddie Mac and if you haven't been to a conference, I highly recommend pick one out and go. You'll be glad you did. You learn a lot. You get to collaborate with your colleagues. And how often do you have Freddie Mac and Fannie Mae and FHA and VA sitting right in front of you, for crying out loud? I asked them a question and I said, how many loans have ever been denied based upon what the bathroom wainscot is? And I don't know if there's ever been a loan denied on that. So my point of that question is, could we take that off the form? Could we take off these things that are shackling appraisers from being more efficient and getting the job done? Let's remove some of the unnecessary stuff. So, Jim, I really appreciate you being here today. I can't believe our time is up. Let our viewers know where you're going to be, how they could get in touch with you if they have further questions or just want to chat with you.
Sure. Well, again, the email is pretty simple. It's jim@firstchoiceamc.com. So first and choice are spelled out one word. So jim@firstchoiceamc.com. If you send me an email, I will answer. It may take me a day or two, but I will get back to you. I would appreciate any feedback that you have. And I'll be at the Appraisal Summit and Expo. It's September, I believe it's September 19th through the 22nd in Las Vegas. And Bryan, I couldn't agree more with everything you said. I mean, for appraisers, you kind of get out of your office. A lot of us work in relative isolation. Chance to network with your peers, find out what other folks are doing, hear some new ideas. It would be a great place to act on some of these ideas to diversify your practice. And like you said, I mean, if you can talk to Fannie, Freddie, FHA, VA, and the regulators all in one space, it's really great time investment.
Appraiser eLearning was a sponsor or co-host, if you will, of a conference in Nashville recently. ACTS is what they called it, the Appraiser Conference and Trade Show. We'll be back in Salt Lake City in April of 2019. And I did what you're going to be doing next month. I did a class, a pre-conference course, right, through my company, Reynolds and Associates. And I had people, I had two appraisers from Hawaii. I had appraisers from Texas, appraisers from Utah, and it's really great to have folks from all over and see how they handle things or just hear some of the challenges that they have in their particular markets. Sometimes it kind of makes you thankful for where you're at. But anyway, thank you, Jim. It's been an honor and pleasure to have you on, my friend. We'll have to have you back. Viewers, check out Jim's course on Appraiser eLearning, or go take a live course from him. He's a great guy. He does a very good job. Jim, we've got to get you back in the studios and maybe collaborate on another course here real soon. We'd love to have you back. To all the viewers, thank you very much. Again, these sessions are being recorded. My name is Bryan Reynolds. This is the Appraisal Report webinar. Thank you very much and have a fantastic week. See you real soon.
Thank you.